I want to show you a setup that I think a lot of traders tend to get confused on because as retail traders, we're always trying to figure out where the market's going next instead of just going with what the market has been doing. Even if you're scalping, you're always constantly trying to swim against the current. Now, what we're looking at here on the left side of the screen is the 15-minute time frame. I use this for my higher time frame confluence. If I'm trading under VWAP, I'm trading under the 20 SMA, I got a little 2-for-1 action there. I'm definitely trying to stay more short-sighted bias unless I'm running into macro areas of daily support. So in this particular case, this is a daily 5 SMA. This is a daily 5 SMA. These would be the only particular spots where I would be trying to find bounce opportunities is on these sweeps and pushes up, or on these, consolidation periods where I can see us pushing off of a daily level. Now, when you get to just looking at the intraday price action on the 15-minute, we are trending to the downside. Clearly, we had a big move to the downside this morning, and then a lot of the action has been these big kind of sweeping bounces that just get rejected and fall right back down. The trade that I want to highlight is right here, okay? So one of the strategies that I teach is looking for these 20 SMA patterns. And these 20 SMA setups, it did trigger along here, okay? Now, this is a situation where I'm not going to be taking the long, but instead I'm looking for this as a rejection spot. And why I'm looking at that is because if my higher time frame is still showing me that the pressure is down, the last thing I want to do is take a position here and then get trapped in this move. So what I've done here is I've drawn this box above this range, and I told myself that, if we confirm and we close over and then we come back to this zone and it looks something like this, let's say a candle closes up here and then it comes back to the zone and it holds, then we can look for that long position into this downwards trend line that I drew from earlier in the day. If we fail to close above and we fail to backtest, right, that break and retest into that zone, I'm still thinking short. And the reason I'm thinking short is because of the macro, or not macro, but the higher time frame that I'm using for my bias here, we're still trading to the downside. So in this particular case, what I can do is I can run a hard stop loss over this area, and I can set a sell stop order right here at that low, the low of this candle right here and that candle right there. So if price bounces and stays below the top of this zone, I can have an order sitting here for a very quick 10-point scalp and try to take a little cash off of it. Now, this late in the day, I'm really not looking for 30, 40, 50, 60-point moves. I'm okay with taking a scalp here and there. This is something that we're trying to go over in Evolution Traders. If you guys want to join the Discord and the community, that link is down in the description box below. You guys can join for free. So just hop on in there, start learning, start learning, start learning. And if you need more help, I offer a live trading portion that you guys can be involved in as well. But on this particular play here, I just got out of this trade and I thought this would be a pretty good video to make, to kind of show people that just because we bounced off of a daily level, your long position should have been somewhere in here, right? Your long position should have been somewhere in here. You should have used the lows as a stop and maybe taken some profits into the previous consolidation spot, or try to target a previous swing high. But if you're not involved in a long here, the worst thing that you can do is start a long position at a prior area of resistance, at a prior area of consolidation, because all you're doing is now taking a long position, even if it's a scalp, right into previous supply. So you're almost better off allowing it to bounce, finding out that swing point, and then getting an order ready to go here and setting a very small take profit. A lot of times you're going to be able to get these filled in and out in under 30 seconds, in and out under a minute, right? So if you can start tacking on 10 points at one mini of $200, or even five micro contracts at 10 points, I mean, you're looking at $100 trade, right? So even if you're trading 2 or 3 micros and you take 10 points, you're looking at 30, 40, 50 bucks, right? So at this point in the stage of the game, it's easy to kind of find those moves. But what I want a lot of traders to get away from is trying to anticipate that that's it, right? Like that's the low, right? Now, again, It could be the low, and this could be a higher low, but we don't know that yet. Until we take this high out, this is not the low. And if anything, this bounce, if you did not get into it somewhere down here, this bounce is actually an area to go back short for anticipating a higher low to be put in and then the move back up. So I'd rather be short from here to here than to be trying to go long and then get stopped out because it falls back down to that retest zone. So this is your daily 10 SMA. We reclaim the daily 10 SMA. That's your break. This is your retest. In order for us to even want to go long, we need to hold this area. And if we hold this area, now we can go long from this floor and we can target this swing high, or we could target this trend line break, and we could start to target prior swing highs. So again, stay on the right side of the trade. Even if you're bullish bias thinking that this is the low, you need to wait for one more step. You need to wait for that retest. And then you can go if we hold. Because if anything, you should be waiting for the bounce, rejection, and then want to go short here and tag this for a little bit of a scalp. 10, 15 points, I believe, is sufficient enough on a NASDAQ. Again, especially if I look at right now, even going into power hour, the ATR is still at 31. So you should be able to pick up a 10 or 15 or 10 or 12 or even 8 to 12 point scalp. Okay. And it doesn't take a lot of scalps to really start making a good day P&L wise. Even if you're trading 4 or 5 micro contracts, you don't really need to take a million trades. You just need to find 2 or 3 setups that you can get in on and make a little bit of cash on. Again, if you guys want to join the community, that link is down in the description box below. Also, I have a free 12-minute video lesson on patience. I think that patience is probably the worst thing, if you're lacking it, that a trader can face, is because if you're impatient, you're going to be, just taking trades because candles are green, just taking trades because candles are red. You're going to be looking at social media and wanting to do what everyone else does. You're not going to know what you're looking for in your strategy because maybe you followed your strategy and you took a loss, and now you're looking for another strategy in the same day to take a new trade on. So patience and waiting for these things to set up. Again, it's a really good video. It's a nice private little lesson there. It's not on YouTube to the public. It's only available for people who want it. That's down in the description box for free. Again, Apex is 90% off, guys. So if you guys need those evaluations, use code DAnthony. Make sure to throw me a thumbs up, subscribe to the channel, and I'll catch you guys on the next one.